In this presentation, we will record a deposit related to a short-term investment maturing. In other words, we have a short-term investment on the books as an asset. It has matured. We're going to cash that in, increase the checking account, decrease the short-term investment within QuickBooks Desktop 2020, QuickBooks Pro 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and selecting the Open Windows list. We're going to open up some reports to consider what we are doing. So let's go to the Reports dropdown up top. We're going to scroll down to the Company and Financial. First, taking a look at the Balance Sheet Standard. Balance Sheet Standard report, changing the dates up top in the Customer Reports Center. And we're going to change the dates to 01/01/20 to 12/31/20, January 1st to December 31st, 2020. We're going to say OK. And within the balance sheet, we'll notice that we have investments in the form of short-term investments of the $12,000. What we're going to do now is cash in the short-term investments, and we're going to basically say that the short-term investments at this point in time is now $12,250. So they've gone up in value, and we're actually going to cash them and then deposit that money into our checking account. Now you can think of there's two types of things that can happen within the investments, and you want to consider those two things. If you have investments that are in something like CDs, then as it increases, as the value then increases, it would be recording basically interest expense that will record on the CDs. And when you then cash out the CDs, then it's going to go back into your checking account, but you'll have the interest on it that will be over and above what the original investment was. If you're thinking about stocks and bonds, then you're going to have a similar type of situation, whereas they may have gone up in value when you sell the stock and bonds, or down in value. And in any case, then you're going to have to sell it, and basically you'll have a difference, which you'll have to record as gain or loss. Now, we're actually going to assume in this case that it's interest income, that we're going to sell this. The difference is going to be interest income. And then we're going to have to adjust for that. So if we receive we get a deposit in our bank for $12,250, what are we going to do? We're going to increase the cash, $12,250. It was because we cashed in this other asset. Therefore, this other asset's going to go down, but it's only going to go down by the $12,000 that's in it. The difference between the two, we're going to have some type of income account because it's over and above what we originally invested by the $250, and we could put that into either a gain or interest income. I'm actually going to put it into interest income here, which would be more of the type of income you would think you would see on a savings type of account, as opposed to a gain, which you would consider on stocks and bonds type of sale. So to do that, let's go do that through the register. So I'm going to go to the banking drop down up top. We're gonna go to the use register, and we're gonna go to the checking. So I'm gonna say OK, and then we are gonna put the date as of 02 and 06/20. So we're back down to the beginning of the month here because we had that end of the month transaction last time. So we're gonna say that this will be not a check. So remember, if you enter this into here and it's a deposit that we want to enter, you could use the deposit screen, but I want to practice basically using the register. Notice, just to check this, if I go to the Home tab, if we go to the deposit screen, this is really critical to use when you have something that's connected, like the two items here that are connected. If you go into here, it'll connect those items that are in undeposited funds. If that's not the case, then sometimes it's easier to go into the check register and just enter it into the check register, as we will see here. Same kind of data input type of transactions at the end of the day, although the format of it looks different. If we then go back into the checking here, we're going to say that I'm going to keep the name not having a name, and we're going to say it's in the deposit screen. This is what you have to remember to make sure that you're on the deposit side, not the check side, if you're going to be entering a deposit. If you accidentally enter a check and you need to change it to a deposit, you cannot just change it in the register. You'll have to delete it or void it and then write it again to put it in the proper place. So we're going to say this is going to be the $12,250. The other account, this is another area where we want to practice using the split item, because we're going to have some of it that's going to be the short-term investment that will be going down and the interest being the difference. Therefore, we can use the split item in a similar fashion as we saw when we wrote the check in a prior presentation, and that now we have as many accounts as we need. So the first one's going to be the investments, right? The investments up top. If I select the drop down and scroll up, the investments will be up top. We're looking for those short-term investments. Short-term investments, however, only have 12,000 in them. So we're going to put in the 12,000 here. We could put a memo, probably would be good. I'm not going to put one here. And then the difference is going to be calculated for us. This is what we need to be in balance at 250. Where is that going to go? Some type of income account. If we select the drop down, say, all right, did QuickBooks set up an income account that I can use? We have other expenses down below, and we only have 3 income accounts. So, and I'm not going to put it in uncategorized, and it's not service, and it's not merchandise, right? So it's something else, it's interest income. So let's make another account. I'm going to make it by typing in there, interest, not expense, but income. And then we're going to say tab, set up. Do you want to set it up is what they're saying. Paraphrase. Yes, I'm going to set that up. And then it has the expense being the default. We don't want it to be an expense. Now, when we think about the income account, we could put income here, but that'll group it up in the top line on the income statement. And we might say, hey, interest isn't like our normal business. I'd rather have it down below so that I can see my operating profits. And then below that, you can tack on the other items, including income. And the interest expense oftentimes is considered in the same fashion as well, although QuickBooks defaulted it into the expense, the normal operating expense. You might consider, changing that to other expenses. So other income is going to be at the bottom of the income statement so that we have a subcategory calculating items that don't include these items. Then we'll go into these items. Why? Because this is something that doesn't happen all the time, so you might want it not to be in the normal operating kind of section and have another subsection to calculate out. That's all we're going to need. It's not going to be a subcategory at all. We're not going to add a description or a tax line. So we're just going to say save and close. There it is. Let's go ahead and record this transaction and see what happens. Obviously, what's going to happen, checking account's going to go down. Short-term investment should go to 0. Interest income should then be increasing. Let's check it out. Record that. Back to the balance sheet. Within the balance sheet, if we scroll up top, we're going to check the checking account first. Within the checking account, we will double click in on it. We'll scroll down to the bottom. We now have this deposit for the $12,250. Double clicking on that. We then go to the deposit screen, even though we entered it into the register, because the deposit screen is the driving form when there's an increase in the checking account. Closing this back out, closing this back out. Then the other side of it is going to go to the investment, and that may have disappeared now. So we don't have the investment here anymore because it's now at 0. We will check it out when we go to the trial balance. Now, next, let's open the profit and loss report. Reports up top, company and financial, profit and loss report. Changing the dates from 01/01/20 to 12/31/20. There's our report. Notice we have the income up top. However, we don't see the interest income up here because we basically get down to this net operating income. And then we say, hey, these are some activities that aren't kind of our normal operation, like this interest income that is down here. And that then brings this loss up a bit to that 6,567 here. So that's where that will line up. And then let's take a look at the trial balance, selecting the reports. We're going to go down to the accounting and taxes and then the trial balance, changing the dates once again from 01/01/20 to 12/31/20. There we have it. Now we can see the checking account here. We can also see that the short-term investments are at 0. We have the detail of that activity, or we have the 0 here, and then the detail is available to us by double-clicking, auto-zooming in on it. There is the detail, taking it down to 0. Here is our deposit. If we were to double-check on that, then we're back to our deposit screen. Closing this back out and closing this back out.